Anita, can you please put it on record? Okay. Good evening, ladies and gentlemen. My name is Ravi Shankar Tandavan, and I'm a proud founding member and chairman for policy, advocacy, and membership at Focus. For those of you who may not know about us, we are a confluence of all the critical utility services of the construction industry. We have over 24 verticals catering to the various other verticals of the construction industry, some of which are architecture, structural engineering, HVAC, fire safety, security, vertical transportation, solid waste management, liquid waste management, and so on and so forth. I would like to begin by inviting our president, Mr. V. Suresh, the doyen of the construction industry. Then Mr. Kannan, our chair for the insurance and risk mitigation vertical. Mr. Subramanian, who is vice chair for the insurance and risk mitigation vertical. Mr. Kannan is the director at Marsh India Insurance Brokers Private Limited, which is an internationally acclaimed risk and insurance intermediary. He heads the corporate segment, property lines, for the company, and also is the business leader for Marsh Tamil Nadu operations. He has over 35 years of extensive experience in general insurance industry across all branches like property, casualty, construction, liability, crime, health, retail lines, etc. Mr. Subramanian, who is our vice chair, has over 30 years of experience from the general insurance industry, having associated with leading PSUs and private general insurance companies in India, and also had overseas industry experience of over 9 years, and won the UAE recognition for as an expert insurance by the Insurance Authority of UAE. He's a fellow of the Insurance Institute of India, FIII, a certified fellow of the Indian Institute of Risk Management, CFIRM, London, a member of Regional Interest Group, RIG, of Institute of Risk Management for India, and a first-class postgraduate in marine geology from the University of Cochin. Mr. Balasubramaniam, who is the presenter, will enlighten us on the various opportunities and avenues available to us for insurance in the construction industry and help in clearing some misconceptions that we may have due to some good or not so good experiences from the past. He is here to empower us with info and knowledge that we may use while planning in securing our projects with insurance. I must thank Liberty Insurance, the sponsor for the event, Mr. Vinod, who readily accepted to be a part of this knowledge series on insurance and risk mitigation, understanding the value that Focus brings along with it for his organization. This insurance risk mitigation program is part of our knowledge series, and we will continue to have several more of these. And we are looking at bringing out topics addressing various branches of insurance, addressing the construction industry, probably every 15 days or every month. We will very soon decide and we will let you know. And this program is under the leadership of Mr. Kannan, Chairman, Insurance and Risk Mitigation, as well as Mr. Subramanian Padmanabhan, who is the Vice Chair. May I request our President to say a few words to put things in perspective for this afternoon. Mr. Suresh.
Thank you, Ravi, for the wonderful introduction that you have given, and a very happy good evening to all the distinguished members who have joined this first session on the most important issue of risk and mitigation efforts, and the leadership of Mr. Kannan, who is the chairman for our Insurance and Risk Mitigation Committee, and also Subramaniam, Vice Chair, and to have the presentation to come from Mr. P. Balasubramaniam, who will be making a detailed presentation, and I'm sure we'll have a good interaction. As you know, the construction industry is one of the most important engines of growth for Bharat Nirman, the builders of the nation, in terms of all the buildings of all asset classes and infrastructure of all asset classes. Be keeping in view the interdisciplinary aspects of not only the civil engineers, the architects, the mechanical, electrical, plumbing, and all the infrastructure engineers put together. There's always a big gap between the cup and the lip over there, and there are issues where time overrun, cost overruns, accidents, changes, things happen. They all do not happen the way that we want to happen on that. And that's exactly what I referred to, say that whether you do it on time, on cost, without any problem, that's what we're all aiming towards that. That doesn't happen most of the times, doesn't happen. You have large number of cases where things start slipping, not entirely within the control of the developer or the professionals. External environment also contributes to that. Natural calamities can contribute to that. Other vulnerabilities can contribute to that. Our idea is to see that how do you deal with those financial issues, risk-related issues, which has got a techno, legal, and financial issues that covers with that. And how do you deal with this one? And everybody, the architect and the civil engineer, the structural engineer, the MEP of people, all the infrastructure installation agency, it will affect everybody. So you require the right level of protective coverage required to deal with all those particular things. That's exactly where the whole thing on insurance and the would provide a mitigation measure. It's a good tool and a good financial protection that you are able to give. And most of the international projects do cover that. Indian projects do not cover that because they don't understand the intricacies of that. And I'm very happy, therefore, that Kannan, along with Subramaniam, has led this particular new vertical, the youngest baby in our vertical there. And in a very short time, they have got into gear a very good document on that. And I'm going to the first of the seminar. I shouldn't talk one word more. And all I require is to see that how between Mr. Kannan and Balasubramaniam, how the whole presentation comes. We'll have good time for interaction. We got the excellent response already with the participants coming. They're all looking forward to this particular area. And more important is how this topic of insurance can be of interest to all the professionals that matter in the built environment and the construction industry. Thank you, Ravi, for the opportunity. And we look forward to hear from both Mr. Kannan as well as Mr. Balasubramaniam.
Thank you, President Suresh, for preparing the foundation and setting the context for this afternoon's presentation. I hand it over to Mr. Kannan to take it on from here. You will have to unmute yourself, Mr. Kannan.
Good evening, all. Good evening, Mr. Ravi, and thank you, Mr. Suresh, President of Focus, for actually coming in and gracing the occasion. I know you're a busy person, and it is a great encouragement to us that you are decided to find time and come and attend this. And we were just discussing about insurance. I just take 2 minutes because there was discussion about insurance. Then we thought that we should say something which is, we felt a decoding of insurance. Actually, Ravi actually has demystified because it's a mystery. Even after 36 years, there are a lot of things which I myself get confused about. So we thought that who would be the best person. So Mr. Balasubramaniam, I had approached him. He is one of the giants in the insurance industry. He has been not only a personal friend, but also a great expert in insurance, especially knowledge sharing. He has had a varied experience right from working with private sector and also ONGC. He started his career with ONGC, then he was United India, ICICI Lombard. He started the mass operations in Chennai, and he has actually brought it to the level where we are all bearing the fruit. And he is an expert in every line of insurance. I would really, and not only that, he has been a great faculty member in IIMs and various places where he is a faculty. And one thing about Bala, I don't know whether I could see in his CV which we got, but he has actually been instrumental in designing insurance products in United India. Some miscellaneous insurance product which was sold by all of us. So I'm extremely happy that he was able to accept this request. And I not waste my your time by doing between you. I request Bala to start.
Thank you, Kannan. Good evening, everybody. Are you able to see the screen, please?
Yeah, but make it full screen.
No, I will make it full screen. Can you see the screen?
Yes, we can.
Shall I start?
Yes, Mr. Balasubramaniam, you can start.
Thank you very much. You see, I'm very happy for this focused knowledge series. I truly hope that this will be of value to all the participants who are participating. The purpose of this speech is to maximize the value of insurance as and when you take the insurance. The areas which we'll be discussing is what is the framework of insurance? When you take an insurance, what can be the gap? Are there solutions available to the gap? Then we will also indicate the solutions. And the most important thing is to have a risk perception. In the sense, in whichever area you're operating, you should be aware of what are the risk exposures you have and see what can be insured and what cannot be insured should be mitigated from your end itself by improving the risk. This will be an interactive session. So I would request all participants to ask anything which comes to their mind as and when I speak. They need not wait for the end of the session to raise their queries. I'll start with the session. The framework is like this. We have capital. Capital creates assets. Gone are the days when assets were only physical. Now assets are digital. Assets are intellectual also. So all types of assets, whether physical, digital, or intellectual, can be covered. These assets generate revenue. The revenue repays the capital. So the capital becomes capital plus. That is why we have come, India has come to a $3 trillion economy. Onwards, march to $5 trillion and more in future. So this is the foundation of a robust economy. For this to operate without a break, insurance is a must. The question is to the participant, if you have to talk about insurance from your angle, as asset creators, as owners, as project executioners, what do you think insurance is? It will be good if you can respond.
You may not have the time by the time they come on chat box and do that, I think.
Okay,
Continue.
nobody is going to respond on audio.
No.
No, okay.
I think because, yeah,
No problem.
they can
I
only
was
put it on
informed.
chat box.
No, I was
No,
told
sir, you
it
won't
will
get
be-
it, sir. You can't do
No
that.
problem, no problem. I'll go ahead. So if you look at insurance, insurance should be always thought of as a contingent capital. That means you should know when you buy insurance, you have capital, and this capital should be available when a contingent happens. The second major thing with regard to insurance is you should know it is a legal contract. When we say legal contract, it's a contract which is enforceable in a court of law. So it is a capital by means of a legal contract, and this legal contract should be the best possible contract which is available in the market for you in order that you have contract certainty. So always think of insurance on these three lines. It is a capital. It should be available to me when I know that I have taken a cover for a certain thing and that is definitely covered. And if they are not going to pay, I can enforce them in a court of law because this is a legal contract. So the purpose of insurance is to ensure contract certainty. Okay. If you look at any enterprise as to what is their major heads of risk exposure, it broadly falls into three silos. Property, as I told you, it can be physical property, digital property, intellectual property. Whatever it is, the asset or the property is one. The second thing is the revenue which you generate. So if anything happens to the property, you lose the revenue generation. So you should ensure that it is not only they bring the property back to normalcy, but also pay for the revenue which has been lost when the property was not functional. And third major silo is liability. Liability nowadays can make somebody bankrupt with environmental law, scope 16, ESG governance coming into play, data privacy laws, and things like that. When you operate across borders, your risk exposure and footprint becomes bigger, and you should ensure that you don't get bankrupt because of liability issues. So liability is a key focus area. And today, more than anything else, we are in a digital world. Whether it is a financial institution, whatever be the nature, unless you are digital, your revenue cannot go up. And when you're digital, your liability also increases. That is why cyber liability has become the single most important focus in modern day. If you look at projects, some of the covers which you will take for different exposures which I have outlined are as follows. If it is the asset which you are creating, you will have this set of policies there: contractor all risk, erection all risk, construction plant and machinery. These are all the normal property covers which you take for a project. And if the project gets delayed and your revenue is interrupted, then there is a DSU or an allop. DSU stands for delayed startup, that the project is delayed, or when the industry is only in erection state, it will come into a revenue production status only after the project is over. But still, when the project is delayed, it moves into the operation state. So the revenue loss because of the delay is covered in advanced loss of profit. Liability, your third-party liability, a wider aspect of it is called as a commercial general liability. The workmen working in the site, exposure to their injury, death, disability. So workman compensation or employee compensation policy, your professional input as design engineers. So any errors on that is covered under professional indemnity. Now, these are the broad silos under which your exposures can be covered. This is just an indication. We said insurance is a contingent capital when it is available. You always have a loss. Loss is what you suffer. But when a contingent capital is available for the loss, then you don't suffer. So what is a contingent capital? Only when it is a valid claim. So please remember, insurance is good for you when your losses becomes a valid claim under the insurance policy. If the loss is not a claim under the policy, the purpose of insurance is totally defeated. And you can see in many cases, it has been totally defeated. To give you an example, pandemic is a recent example. When industries closed down due to government orders across the world, businesses shut. They were not able to generate revenue. Pandemic was something which they never insured, or insurance itself was not available, but it was available before pandemic. Nobody took it, so all industries suffered. Wimbledon took a pandemic cover. They got $110 million settled for not hosting their thing on the first year of pandemic. So that is what you should understand. There is a loss, and the loss should be a valid claim. So what is a valid claim? When the cause of loss is due to an insured peril, when the loss is due to fire, when the loss is due to flood, then it is an insured peril, the policy will pay. If the loss is due to shortage of labor, then it's not an insured peril under the policy, it's not payable. When the loss is due to a political unrest, it's not a peril insured under the Indian policies, so it is not paid. If you're doing a project overseas, and if you take a political cover and social unrest, then it is a possible cover under political risk cover. So you should understand whatever is your risk exposure, you should cover it as a peril under a policy. Then there is a cover available for you. Okay. The claim is there under the policy. But what is important is you should get the capital out of it. That means the amount you have lost. If you have lost 1 crore, the insurance policy should pay 1 crore. But if it pays 40 lakhs or 30 lakhs, still you suffer. So two things are important. The cause of loss should be an insured peril, and the quantum of loss which you have suffered should be paid as far as possible, close to the amount of loss which you have suffered. So to give you examples of insured perils under the policy, lightning, fire, storm, flood, these two things are referred to as natural catastrophic perils, and fire is a normal peril which causes the maximum amount of loss to most of the industries. Does your claim get paid fully? No. Leakages make the claim amount much less than the loss amount. So smaller the loss, probably you will get it fully. Larger the loss, most of the time there is a slip between the cup and the lip, and the slip is very high. So the purpose of taking insurance is to see that the leakage is minimized as much as possible. Okay. So that means if you take an insurance cover, you should understand there can be a protection gap. What is a protection gap? The first worst case scenario is there is no claim at all. That's the worst form of protection gap. Okay. The second stage is you have a claim, but the amount of claim which is paid will be much less, or a pittance. Then also you suffer. So these are the two protection gaps which you will suffer. They are referred to as a coverage gap and a valuation gap. So we will try to see both these gaps in much more detail so as to understand what are the things which we should take care in an insurance policy. Am I going fast or is it okay?
No, it's fine. Speed is fine.
No problem. Coverage gaps. You see, most of the times, people are entirely uninsured. What do we mean by entirely uninsured when you don't have a specific cover? Most of the times, you don't have a specific cover because you are not aware of it. Even when you are aware of it, the cost of insurance outweighs the benefit as per your analytical process at that point of time. Pandemic didn't hit the world for more than 100 years. So people thought the cost spent to that was not good enough. But when it hit, they had no cover. So the entire world mostly was uninsured for pandemic. Okay. When you take a project risk, project people never take a revenue protection cover, the loss of profit cover. So most of the projects are uninsured for loss of profit. Okay. Is the world uninsured? Yes. Globally, we know that 40 to the 60% of the assets or claims are uninsured in the world. How do we know? NatCat. Natural catastrophe, when it happens, even in an advanced economy and aware economy like USA, 40 to 50% of the losses cannot be settled as claim in insurance because they are not insured. It goes up in developing economies like India, it's almost 60%. In African continent, you will have countries who will have almost 90%. Haiti, the recent earthquake place, they are almost 90% not insured. So that is the first cover. People don't have insurance at all. That's the first thing. India's insurance penetration was low. Mediclaim and life has gone up after the pandemic. The second thing is you have taken a cover, but you are not covered for a specific exposure. All the people take an erection all risk cover, but the coverage excludes design defects. As you can see, because of design defect, the buildings are collapsing. So a design defect cover is available as an extension or an extended maintenance cover, which covers faults of the erection which manifests during the operation stage. These covers are available under erection all risk, but people do not take it. As a result of which, this exposure is not covered at all for most of the guys who don't take the insurance, unless if it is an overseas contract where the principal insists on you to take the cover. Okay. Have a look at this video. The hacker had sent a virus and it hits the customer and he loses money in the process. Let us see whether he has taken a burglary policy and 25 lakhs was taken from his current account by hackers. Whether this burglary policy will respond. How does the policy respond is like this. A burglary policy is like this. It responds for physical perils. Cyber attack by an hacker is a digital peril. It's not envisaged in a normal burglary policy. That is why there is a need for a cyber crime policy. So most of the projects today have a lot of things which are digital. So it's important to dovetail cyber cover also into their project policies in order to have a complete cover. That is why today we don't talk in terms of burglary cover and things like that. We always talk in terms of crime all risk cover, which covers cyber crime to a good extent, so that you have a proper crime cover. So all the time the exposures need to be analyzed and a cover to be taken appropriately. As I said, no, if you take RERA, what are the covers which are stated mandatorily in it? It talks about construction all risk policies. It talks about title insurance. It talks about the faults in erection and structural defects which are found within 5 years of handing over. This is a statutory liability for all the people who are in the construction industries for real estate. But I'm not sure how far they are aware of a cover available for this, because I know the cover uptake is very low, even though cover is available. The ideal cover for this, which gives cover for 5 years for the structural defects, fault in workmanship, fault in material, is called as inherent defect cover. So you are exposed statutorily for certain liabilities, but coverage is not taken because of lack of awareness, or I'm not sure what it is. Then if you go to a Bombay airport, you can see curios like this lying ubiquitously there. Then your construction can be a glass facade like this. So whenever you make a description under the policy, you will have to be specific on these items which cost. Many of these facades can be intelligent, can be solar photovoltaic model so that it can generate electricity. So many things are there. There have been situations in London where a glass facade like this created concentration of sunlight wherein cars which were parked in the street melted, and it caused a liability to the building owner. So we are moving into domains which are new. Construction materials are new, and we are not familiar with what can be the probable losses which can come to this. So when you have such things, you should have a specific statement of the type of materials and accordingly state that. For example, glass is limited in an erection all risk cover. If glass constitutes more than 30 to 40% of the project value, you should mention it separately. curios cannot be paid on indemnity basis. You have bought it in an auction. It is a value which is valued by specialist. So you should always insure it for an agreed value. So if it is lost, the value which has been agreed should be paid, and the principle of indemnity should not apply. These are things which you should take care so that there is no coverage gap. If you are a road project, then the most important thing is if you lay the foundation for it, and if it is specifically inside a city, you may be upsetting underground cables and pipelines. Damage to that need to be covered. So the warranty states that you should have inquired with the relevant authorities of the map of the cables and pipes, failing which no claim is payable. So you should look at warranties in your policies and see that they are not breached so that the policy doesn't become void. These are the most important coverage gaps which you can find in an insurance policy. What are the solutions for it? Always go in for an all risk cover. Okay, erection all risk is an all risk cover, but it doesn't cover design defect. So widen the all risk cover. It doesn't cover defects for 5 years. So widen the, have another cover called as inherent defect cover. Okay. The biggest advantage with an all risk policy is you need not prove what is the cause of loss to the insurer. In other words, if you buy a named peril policy, then you have to show the cause of loss to the insurer. Whereas in an all risk policy, the onus is on the insurer to repudiate a claim. So when an insurer repudiates a claim, it's easier for us to fight with the regulator or with the legal facility. So that is why a widened all risk cover, which we normally refer to as a broad form cover, that would be the most ideal thing for you to ensure that there is no coverage gap under your policy. So that's as far as coverage gap. The next thing is I am not getting the full value of my claim. So what are the things which causes leakage to my claim and how do I plug it? That is what we will see in valuation gap. The 4 major things which can cause a leakage in the amount of claim which you get is you have not insured for the correct amount, which is called as underinsurance. There is a deductible under the policy. We can't do much about it, but we can take measures to see that it is minimized. Then there is a depreciation. Okay, this will come for a construction plant and machinery. It can come for your office or other areas where depreciations will be available. Because in a project, if you're doing new things, new equipments which is getting erected, depreciation will not be there. But if you are what you call ripping apart an old plant and re-erecting, then it will become an issue. So depreciation can be there in that area. Then we have obsolescence, which means these products are no more in production. All electronic items will come under obsolescence. We are moving to a digital world. We are moving to industrial 4. We are moving to IoT devices. So obsolescence will also come into civil projects because digital things are embedded into that and they need to be updated as and when bandwidth change from 4G to 5G and things like that. So obsolescence is very much possible in physical assets in the ensuing period. Okay. First, we will see what is underinsurance. What is the sum insured? Sum insured is the value which you state in the policy. I want a cover for 400 crores project. I want a cover for my laptop for 48,000 rupees. So your premium is normally calculated on this. So this is the value for which premium is paid. There is a tendency to underquote the sum insured in order that you pay less premium. You will suffer badly because of that. So never underinsure. Insure always for the correct value. Okay. What is a claim? Claim is the amount which will be paid by the insurance company when the calamity hits you. How much gets paid? as much as you have insured, which means every time a claim is made, they look at your sum insured and check with the actual sum you should have insured. So policies can be market value, reinstatement value. So the sum to be insured will be checked up to market value for such type of policies and will be checked up to reinstatement value for policies which are reinstatement value. And how much will the loss be paid? Loss will be paid according to the ratio which the sum insured bears to the sum to be insured. Let's look at this with an example. You have insured something for 80,000 rupees. The loss is 40,000. Normally, you think that it's only 50% of the value for which I have insured. So the insurance company will pay me in full. But they will look at the condition of average, which sees that whether you have underinsured. So if the new replacement value of that equipment is 80,000, if the freight for bringing it and the erection charges is 10,000 each, then the value for which it should be insured is reinstatement value of 1 lakh. So it's not only the cost of the new equipment, it's the freight to bring it to the place of installation and the erection charges for erecting it. It is 1 lakh. So when you look at the claim, it will be adjusted like this. That 40,000 is the claim amount. 80,000 is the value you have insured. 1 lakh should have been the value you should have insured. So it is only insured for 80%. So the loss will be adjusted only for 32,000. So this is a small example, a leakage of 8,000. If your value is 1 crore, then you will suffer much more. In big losses of 100 crores, the leakage can be up to 8 crores or things like that. So up to 20 crores, because we said under insurance is up to 20% in this. So small losses doesn't matter. We take insurance only for large losses which can make us bankrupt. So when you underinsure there, or if the valuation is not correct, then you will have a big gap between what you have lost and what is being settled. The next thing is deductible. This is always present in all policies. Normally, one of the deductible will be like this. It will say 5% of the claim amount subject to a minimum of 25,000 will be deducted. So when you make a claim of 1 lakh, 5% of it comes to 5,000. They say a minimum of 25,000. So they will deduct 25,000 and pay you 75,000. So what is the learning from this? If it is possible to have a deductible, which is not a percentage of the claim amount, but just a number, then it is much more safer for you. And then the second most important learning which you should have is, if they have a 5% of the claim amount, and let us say you have a 100 crore claim, they would deduct 5 crores. That is why whenever you have a percentage deductible like this, you should say, ask the insurance company to state a minimum and a maximum, subject to a minimum of 25,000, maximum of 1 crore, 2 crore, so that you limit the amount of loss to which you are exposed to. Otherwise, it will become a copay. It is no more a deductible, it becomes a copay. That means every claim you make, you will get, after all adjustment, only 95%. The rest of the 5% you are self-insured, or you have to pay for that. That is the way this deductible works. Okay, if you have a laptop like this, and if it gets damaged like this, it is obsolete. It's no more in production. So you'll have to replace with the laptop like this. If you have insured this for 30,000, probably you'll get 3,000 or 4,000 at best. You'll get the shock of your life that you hardly get 1% or 2%. So it makes sense not to insure laptops after a couple of years, because you are never going to get the value for which you are insured. So if you have to take an insurance, you will have to look at the concept of functional replacement. So if you have a model like this, the nearest available model currently is like this. You will have to Say this is the model I have. This is the model I want to replace. The value of this model value is, let us say 35,000. Mention the model against this and the value, and say that if that damage happens to this, I want that to be replaced with this. That is called as a functional replacement. So obsolete equipments, it always makes sense to insure on a functional replacement basis. Then only you'll get value for your loss. Okay. The next thing is, in valuation, we said that you can insure by two ways: market value or reinstatement value. Market value means depreciated value. Normally, insurance depreciates 5% at the minimum and 50% at the maximum. There are things like CRT, MRI scans where the depreciation can go up to 90%. But normally for mechanical and electrical, it is around 5 to 50%. So never insure anything for market value. Always insure for reinstatement value. So what does the reinstatement value do? It will give you new equipment in place of a depreciated equipment. One. The second biggest advantage for reinstatement value is it not only gives you the value of the new product, it also pays for freight and also erection charges. Let's look at an example. Let us say this DG set is 1 crore, freight is 1 lakh, erection charges 1 lakh. You have insured it. Reinstatement value is 1 crore 2 lakh. If this is totally burned, then if you have insured for market value, the market value is 60 lakhs. You will get only 60 lakhs and you will be out of pocket by 42 lakhs. So if you have insured it on reinstatement value, then you can buy the new equipment back. Otherwise, you will have an out of pocket expense of 42 lakhs. So it's always advisable to insure only on reinstatement value. So these are the major valuation gaps. As we mentioned, underinsurance, depreciation, obsolescence, and deductible. So what are the solutions for it? Always do it on reinstatement value. Depreciation is not allowed. Is not applied. Obsolete items, try to get a functional replacement value insurance. And in case of underinsurance, have a waiver of underinsurance, which is possible. Otherwise, have an escalation clause. In all project insurance, escalation is a must. Project policies give an escalation up to 50%. And so it's always advisable under a CR and DAR to take escalation and most probably take full escalation of 50% available under the policy. You will never suffer underinsurance on that. So these are the key takeaways for you to see that you don't suffer a valuation gap. So whenever you buy a policy, what are the checkpoints? Cover. You have your risk exposure. See whether they are covered definitely as a peril. And if it's an all risk policy, it is not excluded under the policy. See whether your deductible can be a number deductible and not a percentage deductible. If it's a percentage deductible, have a higher limit. Price, of course, you will always check. And claim, what are the pain points in the claim? The surveyor as well as the insurance company. So ensure that you have a surveyor who understands your type of risk. Ask them to be put in your policy as that panel of surveyor for you. One. The second thing is always deal with an insurance company which have a tendency to settle claims. Here, it's not the institution, it's the people. So the person who are dealing with should be good. He'll be good up to a certain value because you are going to deal with branches and divisions. What is important to look at is which is the team which is sitting at regional office or head office, whether they are tuned properly for settlement of claims, whether they are in your line of business and understand, and that will ensure that the men behind the institution are robust, smart, and willing enough to settle your claim properly. Okay. mapping the risk, you should build resilience so that your network is protected. If you look at what are the top risk exposures for India, which has been voted by the corporates, it looks like this. Okay, sorry. First of all, when you look at risk exposure, we should understand three things. What is your risk? Whether the risk to which you are exposed can be covered under peril in your policy. If there is an hazard to that risk, whether you can improve your risk by mitigating the hazard. For example, cyber is a risk to which you are exposed to. You can take a policy to cover cyber. So nobody is going to give you a cyber cover unless you mitigate the hazard. What are the hazards? You should force good passwords. You should always patch up. You should encrypt. You should not allow people to use any device to be attached to the computer. You should not allow them personal websites and email IDs to come for the office use equipment. This is some examples of hygiene or risk improvement standards for cyber. Today, you will not get a cover unless these minimum standards are there. So that is why the hazards to be addressed by risk mitigation. If you look at the corporates in India, they have voted these are the top 10 risks for India. Cyber is number one. Pandemic is on the way out, is what we fondly believe. Business interruption. Unfortunately, in India, all these three things are not covered by most of the people. Natural catastrophe, cover is available. Climate change, market developments. You see, climate change is, for you, what you look at is cyclones becoming super cyclones. Areas which are not flooded normally becoming flood prone today because of precipitation within a short span of time. 25 centimeters within 4 hours. This type of precipitation happens in cities nowadays, and because of which areas which have never been flooded gets flooded. Okay, change in legislation, loss of reputation, shortage of skilled labor. These are the top risks. If you look at specifically for construction industries, what are the top 5 risks are the following. Business interruption, as I said, you are not taking business interruption. Today, supply chain interruption is creating havoc in construction industries, because if the equipment which you are installing gets damaged using testing, the next equipment is going to take time because of supply chain disruption. You will have to factor the delay because of supply chain. NatCat, as I said, is becoming increasingly more. Cyber is something which is not seldom, which is never thought of in a project. You should ensure that cyber is inbuilt into your construction risk. Shortage of skilled force is not insurable, but you should mitigate it by having alternate systems for it. Look at this picture. These people would have fallen and died normally because of the security harness they have. They are safe. So you should always look at what are the possibilities of hazards in your operation and ensure that you have risk improvement standards in order to safeguard lives and properties. So normally things which increase the extent of loss in the event of loss is called as an hazard. Risk improvement prevents the probability of loss, reduces the probability of loss, and also the quantum of loss in case the loss cannot be prevented. So embedding resilience is very critical. Today, all industries have risk managers, or if they didn't have risk managers, or appointing risk managers, or the CFOs themselves are becoming risk managers, or the Cs also have to wear that hat. Because unless you embed resilience in your industry, your industry will not work long in current days of heightened risk exposure due to digitization of the world. So fire protection, warnings, what is that which I say as warnings? In a civil project, you should warn people not to enter the premises, or if some area electric work is happening, you should have cordoned off that area. supply chain duplicity you have to protect. You'll have to have in order to prevent delay, and then cyber protection. I also already gave examples of what are the minimum protections which you should have. That is in brief is what I wanted to share with you on what is that you should look at insurance, why it is a contingent capital, what is a coverage gap, what is a valuation gap, how do you map the risk, make your industry robust, resilient, and a revenue generating cash cow. Thank you.
Thank you, Mr. Balasubramaniam. That was a very useful presentation. And now if we have any questions from the audience, Mr. Balasubramaniam can answer them.
Many questions which are already raised and which are already on the chat box, and Mr. Kannan seems to have replied some of them. So we will coordinate that. Kannan can moderate that and ask Balasubramaniam, sir. Because you are the expert also here. I can chip in where needed. I hope that's right, Mr. Kannan. Am I right?
Sir, fine. I
A
think
lot of questions, lot of interesting questions have come as and when the presentation was happening. Yeah, go ahead, sir.
I got one or two questions which I answered, but I think it will be fine if people can raise their hand, unmute and talk, because that will give a better thing. I think Mr. Ravi can help in that if somebody wants to. Because only one question I have answered, because I didn't get so many other questions. So I thought that so Ravi, you can just tell if any other questions have come.
Yeah, one of the interesting question is which are all the companies which are offering loss of profit covers. So I think Mr. Kannan is the best person to answer that. Not answer.
You are also
that.
Best person. Sir.
Arrange that. I am saying that instead of taking the trouble which company scouting for it, we have Mr. Kannan from Marsh, and Marsh is one of the best companies in the world to arrange solutions for risk mitigation, especially in insurance and risk management, risk mitigation areas. Therefore, it is for the participants, if they're requiring this kind of covers. Of course, this is a success of this today's presentation that Mr. Balasubramaniam, I've been knowing Mr. Balasubramaniam for the last 35 years, and he is presenting the, every session with the same vigor and, the clarity. I hope that the decoding session must be very, very useful for the participants. He has beautifully explained the various aspects of, risk mitigation when it comes to, the insurance part. This is what I am actually, seeing the gap. The gap in understanding is risk. Insurance is arranged as a last resort. Sometimes from the project principals or somebody is pressurizing. So it is taken in a last minute without any due diligence. Basically, the due diligence is what is very, very important. So that is what is lacking. This decoding, the session would have given a lot of, insights into vital aspects of arranging insurance.
Okay, Kannan, one second. I will answer. Chaco, you have asked, how do we arrange what you have asked, functional replacement. Okay, you see, the way to arrange functional replacement is, if you have a list of electronic equipments, you should produce the list, value for it. Also get from the IT department what is the nearest available equipment which is available with model type and specs and the value for it, and produce that list and ask the insurance company to provide a cover on that basis. Then it is possible to get a cover for functional replacement.
I will add to that. Recently, we have arranged an insurance with Tata AIG covering our properties, including generator set. The generator was purchased about 12 years back. Therefore, as a part of the valuation exercise, we got the quotation, the latest quotation. and gave the specifications also. So it served two purposes. One is that replacement, that what we have been discussing, that also is there. The another one is about the, adequacy of the sum insured. Therefore, from our side also, we should be, able to produce some more evidences or information to the insurance company. Therefore, at the time of claim, we are not surprised.
Barring that, I don't see any questions which is to be answered, because other question whether loss of profit cover is available. Most of the insurance, all the insurers other than people like specialized insurtech insurers have loss of profit covers. So getting a loss of profit cover in India for traditional perils is definitely possible. In loss of profits, you have another variant called as non-damage business interruption. For example, your factory is not flooded, but approach to your factory is not possible because of flood. That is denial of access, things like that. So non-damage business interruption can be a challenge, can be done with certain insurers, but loss of profits can be done with everybody.
But I think the questions on installation were different, especially critical utility service covers so many. So installation service of different entities deal at different points of time. Are the risks and benefits shared, or can you pin down on somebody's fault? That is question number one. That's asked. You need to reply, because so many groups are coming and working and something happens wrong. As a result of one problem, it leads to some other problem, etc. So we'll have to give an answer on that. Who will deal with that?
I'm sorry, I didn't get your question in the sense.
So the question is there already on the chat box. I said critical utility service has got many installing agencies coming over there. All will come in a three-dimensional space. Due to the problem of one of them, the remaining problem happened over there. So do we have the risks and benefits shared, or can you pin it down on one entity's fault?
No, that will be addressed in the contract between the parties, because your question is about somebody is committing a mistake in the value chain or the contract project contract.
Yes.
So in that instance, in that case, there is an individual contracts which will come into play. But in the larger interest of insurance, what I would advocate is it's better to have a principal controlled insurance policy for projects. If that is done, what will happen is all the contractors, subcontractors, parties, including even architects or consultants, everybody's interest can be protected, incorporated in the policy.
You're given.
Yeah.
I like the reply you're given on the chat box. I'm glad. Thank you, sir. But you indicate the policy will be for the principal, main contractor, and
all the parties should be named as co-insured for the respective interest.
Okay.
Yeah.
That's a good reply. Thank you very much. Functional replacement. Somebody asked a question, sir. Sebastian Jaco.
Yeah. His question is how to ensure it, how to get it done in the policy, because his question is very, very interesting, because he is from the other side of he is not the user, he is the enabler. So his question is actually laced with the kind of the scenario we find in the insurance market. So to find the solution for that, at the proposal stage, intentions of the party should be made very, very clear. To answer that, this is what I said, that for ensuring the generator, I produced the quotation not only for valuation purpose, for also to show that this is what is available in the market. Therefore, the replacement, what Mr. Bala has said is answered there. That you have.
I have a question Bala can answer. Mr. Kalirajan has asked. Does the escalation cover take care of commodity price variation? You can explain that.
Very important. That's a very important one. I was about to say, Kalirajan's question is important. Chennai chair.
Okay. You see, escalation is normally meant to address two things: inflation, forex fluctuation. So commodity price variation doesn't fall under the two, but it doesn't matter. Let us take, for example, crude. Crude is a commodity price variation. So on the if crude oil is the input for you, and if the value has changed, escalation will definitely take care of it. The only thing is the VIX or the volatility of it is so high, you should have an escalation which is big enough to factor that along with other things. For example, if crude fluctuates, the price variation of crude, then the dollar price variation, then the inflationary variation, all these three things together should fall within the escalation percentage which you have chosen. So the short answer is commodity price variation will be part of escalation, because it just looks at what is the cost at which you have to procure now, and whether the value you have insured, which is sum insured plus escalation, will be enough to pay for it. So the short answer is yes.
I would like to add something more to what Bala has said, because having closely associated with the industry, the civil industries, this escalation is not only just a vision. If the commodity prices are increasing, then the project itself, the price itself will be varying. Therefore, the project has to be totally, the value has to be redone. And then you have to increase the sum insured halfway also. The insurers, what they will do it from the beginning of the project. They will charge the full premium. That is the only implication. Otherwise, you are insuring for the full value of the project. This is the only solution. If it is escalation is not just sufficient, if the project cost itself is going up.
One thing we should understand is project insurance have a maximum escalation of 50%. So if your project is 1,000 crores, if you take a 50% escalation as maximum escalation, the maximum value available for you is 1,500 crores. So you should understand whether your project will overshoot that.
And one more interesting part in, the escalation word is not used in a rampant manner in foreign countries. They use different connotation as an additional sum insured plus project increase or something like that. Therefore, there is no confusion about, it is related to only the currency difference. As Mr. Bala said, 50%, the advantage is there to increase the project cost through the escalation route. The escalation should not be construed as only a dollar or money, value variations. It is for the project cost, including the commodities.
There's a prime funding agency for the project or a consortium funding agency for the whole project, which cover civil structural services altogether, are also insisting on insurance cover as an important issue with the main developer along with all the parties together?
He's asking whether the lender will insist on insurance.
Very, very much so. It is there. The practice is there. That is there. Definitely, it is there.
I remember
no lender worth his salt will never.
They will control. They will control the insurance. Yes.
Unless insurance is in place, and they will also have specific clauses which protect their interests. To give you an example, the lender will ask that the policy should have a non-vitiation clause. What it means is, even if the principal does a breach of warranty because of which the cover becomes void, it should not affect the interest of the lender. In other words, it should not vitiate the interest of the lender. You will have to be paid in full. So that is why lenders will always insist on insurance cover and will have special clauses which protects the interest of the lenders.
That agreed bank clause also will be part of that process. It will take care of all the financiers, all the interested parties, and the claim will not be settled without the consent of the financier.
And does the project proponents and all the concerned professionals, as you rightly said, sir, are able to get some amount of incentive to have the insurance cover not being so much for taking care of the risk involved? Because I find large number of insurance companies do come with very interesting policies where the cover component is quite okay. I mean, they find it's a reasonably good amount of thing and not too high. That situation, yes, sir.
I can tell you very clearly that having seen the markets of both, UAE and Indian market, the premium charged by Indian market is only a fraction for any policy.
Yeah, that's what I was
Yeah.
heard. I heard that.
Yeah, one more thing is the property insurance market is very, very tight there in UAE. You don't get simply the insurance cover required. Here, fire insurance, you can get it in a jiffy. The due diligence, done by the insurance company is very, very limited as compared to what you see in UAE.
Is it because the inspections and audits are not being done? Maybe the insurance company.
No. There is a difference in the risk itself. In India, the fire accidents are less. In UAE, it is very, very rampant, very, very high. Basically, because of the climate. The climate is very, very arid and very, prone to accidents, fire accidents.
So, very interesting question has come, Bala. How to arrive at some issue for professional indemnity? I think this is something which I would like to address.
Okay. This is a question which everybody asks, and there is no good reply for it. The simplest reply I will say, normally you should ensure that the professional indemnity in the contract is getting limited. In the sense, when you contract with the principal or your contractors, or you should limit in the contract itself that your professional indemnity is limited to the contract value.
Contract price, yeah.
That is what you should ensure in the contract. If you limit that there, then the professional indemnity can be taken up to that level as a policy so that your exposure is correctly addressed. If not, it depends on what you're dealing with. For example, to give you a typical example, if you are contracting for a nuclear project, wherein you are supplying material for the fission area, then the liability should be as per the Nuclear Damage Act of India. One example. The other example is if you are in the design, most of the errors which happen in a professional indemnity policy is normally the cover is given for the build portion alone. So you should, whenever you take the cover, and if you are giving the intellectual input for it, you should have the design portion. So the ideal way to take a professional indemnity cover is for design and build. If you are exposed only to the build, then you can limit it to the contract value. If it is for the design and the build, then it should be equivalent to a component for the intellectual property of yours. So for build portion, contract value, design plus build, contract value plus a component equivalent to the intellectual valuation of the intellectual property.
There are two. Can I raise to one question? There are two important ones. One, the Maradu Tower, which has been brought down, which had all the approvals, no problem in the building, structural or fire or anything. But still, highest court has decided to bring it because the CR said was not followed. One case. The other one is the one which took place 3 days back in Gurgaon, where from the whole building collapse is killing so many people there.
Yes.
Now, insurance cover was there in both particular cases, but I understand very difficult for getting the value as far as the project property is concerned. A very small value only can come out of that. Because the whole thing got demolished based on the Supreme Court order. Litigation. In such cases, maybe the insurance cannot cover that. Is that it? Or you should have some other measures.
Supreme Court orders something to be demolished, then there is something illegal about it. Insurance doesn't cover illegal things.
Yeah, of course, CR said. I told CR said. Even though earlier they got all the approval from the local body, panchayats and all that, all these very luxury apartments of 3-story, 3-bedroom, 4-bedroom apartments are all paid by people. All of them are, all the papers are all there, but still later on, as you said, due diligence word you used rightly in your presentation earlier. So they would not have done the real due diligence earlier. It's quite possible. Otherwise, Supreme Court would not agree.
No, what you are currently saying is the dynamics of India. India, which was errant and doing things which were wrong in the past decade, is correcting itself now. Wherein legal forums, environmentalists, high courts, governments, you see, even if you take Tamil Nadu, all encroachments in lake areas, water bodies are getting demolished.
Yeah,
so when a legal position changes, insurance also will say that what was legal then is illegal now. I will not pay a claim.
Yeah, I think that is what I wanted to know, because you're very right. I'm on the Ministry of Environment, Forest and Climate Change. I know that large number of cases which keep on coming every time, which affect land, air and water, but somehow or other they get the building plan approval, but they go and then the environmental, the green tribunals, national green tribunals catch them in a very large way, as you said, with very punitive measures to come on that. So we got to be a little more diligent, looks like, for all these approvals, looks like, and I'm sure insurance companies will look at it as Saab said, in the case of Dubai, it's not easy to get it for fire clearance. They go through very minutely, whereas here we are able to get it very easily, insurance cover. Maybe the answer lies in the nature of due diligence, I think.
It is more in the nature of the numbers, sir. India is doing 2 lakh crores worth of insurance. Everything gets swiped under that large volume. When numbers are present in dominant things, no, small errors will get flushed down. Okay, one query from Mr. Pasha, throw some light on marine insurance.
Marine insurance.
What you see, probably they will have a session on that. But few things which you should remember is marine insurance cover transit. Okay, what is the most important thing? When you take a marine insurance, always take an all risk cover. If it is import export, ICCA, inland railroad transit A. First thing is take an all risk cover. 70% of the marine losses are due to packing faults. So packing is the single largest cause for losses in marine. So always get your packing certified by a good certified Indian Institute of Packing or BVQI, Bureau Veritas Quality International. If you take care of packing, if you take care of an all risk policy and look at what are all the warranties there, and ensure that the warranties are complied with. So they will say, this should be loaded only in double gunny bags. This should be a 5-ply corrugated cardboard box with anti-moisture sealing. Things like that, they will have warranties. Ensure that warranties are there. The last and the major component is ensure that you give it to a carrier who is of repute and who can be sued, from whom recovery can be made in the event. That means they have net worth and they have repute. So A cover, packing, setting it with people of repute, carriers of repute, are the simple things which you should remember when you deal with marine.
And a good insurance policy.
ICCA is the good insurance policy, sir.
At one point of
carrier, I mean.
At one point of time, not too far away, about maybe 2 decades back, the Tariff Advisory Committee and insurance companies were all linking together, and the fire-related safety features were incorporated as part of the Tariff Advisory Committee itself, as part of the insurance tariffs. I hope
Today, if you
are
talk
aware of
about
that.
Tariff Advisory Committee, nobody will know because it went defunct at 2007.
I know. I was telling 2 decades, 3 decades. I'm only trying to link the insurance regulation and the control and the policies on fire was a little more better controlled earlier. So because they were all linked, the regulations were also brought out by the Tariff Advisory Committee, by the way, earlier.
Today it is digital, sir. So what's happening? When a vehicle is moving, there is a GPS. They're tracking the GPS. They also know which freight forwarders should be avoided. Salvage value, they are getting better value.
Okay.
So a lot of things have changed on marine, and the public sector insurances are not good. There are specialized private sector insurance who do well on this marine aspects. If you take Tata AIG, Bajaj Allianz, they are the leaders. Fragile commodity like glass, Bajaj has seen that the loss ratio, which was 140%, is currently at 47%. So it makes sense to deal with insurers who can improve your risk and make it a better risk.
Better risk is a very difficult, area to dwell. Better for whom? If they
better for the community at large, sir.
Yeah.
You see, when I say better risk, the risk should not become a loss. When anything becomes a loss, then it is a loss to humanity. So better risk as to whom is not the question. Better risk to the community.
Yeah, in the interest of even the insured, getting a claim is not the right thing. Seeing that how to not get into a claim situation, that is risk mitigation is what is important. Wonderfully
Mr.
explained.
Balasubramaniam, we have professionals within Focus, and there is somebody who wants to understand how is it that one arrives at sum insured for professional indemnity. Like
we replied that. No?
That is replied.
Okay, done.
No,
Is it?
no, that is not. Mostly it is for CS and ACS. It is specifically.
What
No,
CS and
CS is, ACS is, that is different.
For the chartered, because we did professional indemnity, mostly we thought about the construction. Right? This is for
No. Yeah, even if it is chartered accountant, will reply. You see, if you are a chartered accountant with whom you are dealing with, if you are dealing, you are the chartered accountant who deals with Reliance, then your professional indemnity should be sky high. If you are dealing with personal income tax, then it has to be on the highest net worth individual, how much he can charge you for professional incompetence. So always remember which is the highest net worth individual or the highest value of corporate whom you are dealing with in your book size, and what is the maximum liability you can call for. You can be called for in that situation, and that should be the value which you should take.
Maybe one more thing can be, like the annual income of the professional itself can be protected.
That is not the point. So that is only a matter of pricing. But what the Bala says is right. So what any liabilities, what is the maximum you have to shell out in case there is a problem that has to be understood and then taken. That is the best way.
Very interesting questions and good responses. Good to thank everybody for that, really.
Yes, the time is
An
going
excellent
to be,
presentation, I think.
Yeah,
Somebody wanted a copy of the presentation on that. I'm sure, as usual, the focus policy is to upload that particular thing over there on the YouTube. I'm sure, Ravi.
That's right.
The clarification can be given.
So if we are done with the Q&A, then should we go towards the closure, President sir?
Yeah, we should thank, of course, the chair and the
Yes,
co-chair
sir.
and the wonderful
Mr. Subramanian
Yeah,
Padmanabhan will give the vote of thanks.
I will have the predicament of a vote of thanks because I'm part of the program. Therefore, thanks is being shared. First of all, let me thank the audience and the wonderful questions they raised. The participation is very, very good. And without the participation, the meaning of, the program becomes questionable. Therefore, the participants, first of all, congratulate the participants for being present and raising very interesting questions and making all of us think and give appropriate answers. Now, coming back to Bala, I am meeting Bala after 35 years. And Bala is a very, I cannot simply say very good presenter. He is excellent in his, work. And I have seen him in action when I joined the industry. And now I am seeing him again, presenting with the same kind of, preparation, backing with all the, data, information and all that. The way he has presented, decoding is really actually, people must have seen that insurance aspects, every aspect has been decoded. And insurance is always an enigma for everyone, even for the industry people, because there will be gray areas always coming up. So it is not possible for one person to, always, attend to all the, attempt to question all the answers. He has beautifully done that. And now I have to thank our chair, Mr. Kannan, for identifying a person, suitable person, because, the first program is always going to be a, what do you call, watershed program, which will evince interest from all the quarters. And we will have more and more programs like this with the, active participation from all. And let me also thank this, Focus as an organization. Focus, as you see, Focus is what? A forum of critical utility services. So only in construction industry, I find a lot of scope for insurance as a inevitable aspect of the project itself. Like what Mr. Bala said, he said capital, it is a contingent capital. Therefore, don't take insurance as the last resort. When you start the project, you have the contingent capital also with you. This is very, very important. And the project insurance commences from the preparation of the ground and then putting up a small temporary office or facilities, godowns and all that. Then people come there, then starts dewatering or preparing the ground, dewatering, and then foundation, all those things happen. Therefore, the insurance should never be missed, even at one point. It should be from the beginning until it is handed over. Then comes the question of completed project, not taken over by the people. That part also should not be left unattended, because the project, people who are executing the project will not be able to get the money from the principals for the work done. Therefore, you can never afford to leave the project without actually officially handing over. Therefore, your insurance should be complete, including the liabilities. The liabilities thing should be always with you. Yeah, please, sir.
One question, because you said that very interestingly, now it's not only completing of the projects, all the built environment project, be it a commercial complex or retail or hospital or hotel, all of them comes when the whole thing is completed during operation stage. The assets and facility management come in the picture. Everything is working properly. So the type of insurance that's required continuously to deal with that particular risk component during the operational phase, life cycle of the implementation, I'm sure that's where maybe the depreciation point, which was told very rightly in the presentation, will come into play. You may like to add a few things on what can be done during the AFM stage.
So what we have decided, sir, this was basically an introduction of insurance to the construction industry, what exactly the value gets about. Specifically, what will be the liability and other things in an operational projects and all, we will be actually taking it up separately. So if we put everything crammed together, we have made about 5 or 6 topics which we have sent it to, which we have approved. I'm sure Ravi sir also will sit and we will try to find out how this all can be brought about. So every day is a risk. So that has to be, we have to see that this was only a basic introduction. So it was more to come. I am sure, sir, with your...
Maybe our subsequent seminars can move on.
I will discuss with you, sir, so that you can also guide as to how it can be put across.
Actually, President sir, we should have an interaction session, because this is going to be a continuous issue coming, because once the project is handed over or partially handed over, what we can do. And then for the rest of... for the rest of the project.
I'm very impressed with the type of discussion that we are having. Really brings out the whole issues well. And as you promised as a team, now and each month, one event-based slices being brought out, which will bring clarity, will come on that. Well, the very first presentation itself has helped substantially, but I'm sure if that is a mile long, inch deep, you'll go inch long, mile deep in the subsequent session later.
Yeah, so that is what something, the insurance is a never-ending, subject. As you rightly said, what can we do for the, the kind of accidents which we have seen, Marad or the other one? That is a very interesting question, because something which is illegal, the insurance cannot cover. But there is a way out for that, because human minds, humanity, or see, ultimately for dead people, compensation should be given. The government pitches in and then gives some compensation that is not good enough. Therefore, even if the building is completed and it is handed over, it is for the association to take, insurance, some kind of insurance. Okay. One can be association can take a liability insurance. That is one thing. Association can also take a personal accident policy on for the residents, for the occupants. So these two things can cover the human losses. And about the losses to the structure, the liability can take place, can work out, because the liability insurance can also compensate for the losses for tenant to tenant liability, tenant to that owners to tenant liability, and owners to public. So
and
all these things. We will have a separate session.
That's what I suggest, that we can just
No,
So I think
because
we
the
are
question
just,
was asked, I'm just
yeah,
attempting to
yeah.
answer that.
Yeah,
To
yeah.
sum up that, I am really impressed, and like, me, I think all the participants, our president, vice president, or whoever has participated and whoever has contributed to this is a big thanks. And we are very, very happy from the insurance vertical. Insurance vertical will be, I think this is what I want to say. Insurance vertical is foremost in the, it should come in the top, because the capital, contingent capital and capital should be along. Therefore, the insurance should carry the interest which is it deserves. Therefore, I think this session, I thank Mr. Bala for driving this point very, very clearly and giving the decoding for all. And this will really, instill interest in the days to come. I'm thanking all for this opportunity, especially Focus. And Focus
Thank you.
Rugby.
I also want to thank Ravi for mentoring this sector very well. Ravi Shankar Tandavan,
Ravi Shankar
along
Tandavan,
with
I should say
the
that policy
Kannan
and advocacy. Yeah.
yes, sir.
Wonderful.
He played an important role to bring this sector, and I thought I should place on record the right appreciation for that. To get in all the three Tribhutis which are there on the
With a short span of time, he introduced this program,
yes,
and
sir,
we are
yes, sir.
thankful
Very
to
right,
him.
sir.
Yeah.
Very
And,
right.
and also, sir, Mr. Dominic and Anita for actually
Sure. They are
helping
part of the
this out.
teams.
And also our sponsor, Liberty, who actually came up immediately, and then I'm sure Mr. Ravi has already thanked, but I thought I also join in.
Good.
Thank you. I think, sir, then we can over to
Just to repeat what Mr. Kannan said, very sorry, Mr. Kannan, your audio is a little scratchy. But just to repeat, we thank the admin staff of Focus who have provided us all the support. Dominic, our event chair, and right from the bottom of our heart, our thanks to our sponsor, Liberty. We really appreciate your support to us, and we look forward to many more programs that we will be having, where we will probably request for your support for these programs. Thank you very much, everybody. Good evening to you.
Thank you.
So we sign off.
Yes, sir.
Yes, sir.
Thank you, Mr.
Right,
Balan.
Ravi?
Thank you.
Thank you.
Well done.
Thank you.
Well
Thank you,
done.
Bala.
Thank you, sir. Thank you, sir.
Dominic,
Thank you,
you.
Mr. Thank you,
Thank you,
Mr.
Mr.
Padmanabhan. Thank
Thank
you,
you,
Kannan
Ravi.
sir.
Thank you,
Thank you
Ravi.
very much. Subbu, thank you.
And then Padmanabhan and
Fantastic work.
Subramanian. Thank you.
Thank you.
Superb. Thank you.
Wonderful. Thank you.
Thank you.